This is your LMAX Exchange technical update for Monday, December 5th, 2016. Euro dollar. So the euro's seen a bit of a correction out from recent trade, but overall the market is threatening the establishment below the multi-year base at 104.63 from 2015. If we see a close below that 2015 104.63 low, it could set the stage for the next major downside extension towards parity and below. At the same time, if the market rallies back above the recent highs that we've seen and towards the 109 to 110 area, look for the rally to be very well capped with a broader downtrend still firmly intact. Sterling dollar. So cable has seen a push up towards some key resistance, that previous base at 127.96, going all the way back to July of 2016. If the market can establish above that previous base in the 28 area, it could set the stage for a major base and open the door for more significant upside. If on the other hand the market is unable to establish above 128, it leaves the door open for a lower top and fresh downside extension, eventually back to retest those recent 31-year lows down around the 120 area. Dollar yen. So dollar yen has seen a impressive rally over the past several days, but the market has now finally run into some key resistance up towards the 115 area. This opens the door for a potential correction that takes us back down anywhere in the 107.50 to 110 area before the market looks for the next higher low and fresh upside extension beyond 115. Euro Swiss. Euro Swiss has seen a bit of a bounce in recent trade, but overall the market is favoring the downside after breaking down below a multi-week range between the 108 to 110 area. This sets the stage for the next downside extension below recent lows that we're seeing down around 107.15 and towards down around 106.87 and towards a retest of that 2016 low at 106.24. Aussie dollar. So Aussie has seen some consolidation in recent trade off those recent lows, but overall the pressure here remains on the downside, with the market expected to be well capped into rallies ahead of the next downside extension below that low that we saw back on the 21st of November at 73.11 and towards 71.45 further down. Dollar CAD. So despite this latest pullback in dollar CAD, the market remains confined to a broader uptrend, and the market now is expected to find some support and a higher low ahead of the next major upside extension beyond the recent highs that we saw just shy of 136 and towards 140. At this point, only back below 130 would compromise that constructive outlook for dollar CAD. Kiwi dollar. So although we've seen a bounce in Kiwi, the market looks to be topping out in 2016 after stalling out just shy of 75, and look for a lower top now ahead of the next major downside extension below 69.52. That's medium-term support going back to July of 2016 and towards the 65 area further down. SPX 500. So the S&P 500 has recently broken up to a record high above 2200 up towards 2215, and it's interesting now to see whether the market looks to stall out again in favor of a bearish reversal or is continuing this uptrend for fresh record highs towards 2250 and 2300 further up. At this point, key support comes in around 2180, and a break and close below that level will be required at a minimum to take the immediate pressure off the top side. Gold. So gold has seen some intense setbacks over the past several days, leaving daily studies in oversold territory and expecting the market to potentially see a bit of a bounce. The levels that the market has come back down to also coincide with longer-term internal support going back to 2013, and so we could still be in the process of seeing a major base carve out, though the market would need to hold around current levels and see a bounce back above 1200. At that point, it would shift the focus back to the top side and suggest that the market could again indeed be basing out in favor of fresh upside back towards and above the 2016 highs at 1375. Ultimately, only back below 1130 would compromise the basing outlook for gold and put the pressure back on a retest of those multi-year lows that we saw just shy of 1000 back in 2015.